What's happening, YouTube? It's Accounting Man coming at you live from room 38, Armada High School, crushing it. This is Accounting Man, and you can account on that. Today, we're going to be going through Work Together 2-3, knocking out some transactions that we have not learned before, sales, expenses, some owner equity. So without further ado, first transaction says April 10th, received cash from sales. So the first thing you need to figure out is what two accounts are affected. So what two accounts are affected on April 10th? Volunteer. Burns? Cash and sales. Good. So we have cash and sales. Just for fun, let's go ahead and label them their debit and credit part. Debit, credit, debit, credit. Debit's on the left, credit's on the right. Shout out Colin Dodds, the accounting rap. You see the link in my bio. Then, depending on what kind of an account it is, will depend on how it increases or decreases. So, for cash, what kind of an account, asset, liability, or owner equity, is it? Asset. Good. So assets increase on which side? The debit side. Debit on the left, credit on the right. So it increases on the debit, decreases on the credit. Sales, a new account that we just learned about, is going to fall under the capital account or the owner equity, and owner equity increases on the credit side. So we're going to go up on the credit side, down on the debit side. Now that we know that, let's do some numbers. Received cash from sales, $600. So where am I going to put 600 on the cash T-chart? Which side, everybody? Debit. Good. Throw 600 here. Before we even talk about the logical part of why it would be credited to sales, if you have a 600 debit to sales, what must you have to another account? A credit of how much? 600. So something has to be credited 600 in the following T-chart, and it happens to be sales. Sales, we learned, is part of owner equity. Owner equity increases on the credit side, therefore 600. So if you were looking at the accounting equation, assets equals liabilities plus owner equity, you got asset of 600, owner equity of 600. ALO, or assets equals liabilities plus owner equity, is still true. Next one. Sold services on account to Sam Erickson, $850. So we have to figure out what two accounts are affected. Sold services on account to Sam Erickson. What is one of my accounts going to be, everybody? Account receivables. And we're going to say Sam Erickson. So accounts receivable, Sam Erickson. It's important to write the people's names so you know who owes you money and how much. Account receivables are assets. We know that. Debit on the left, credit on the right. Assets increase on the debit side, decrease on the credit side. And in this transaction, it's sold services. So the keyword there is sold. The verb is sold. So what is my accounting account for this T-chart? Sales. Good. We made a sale. We did not receive cash. We got an IOU from them or an account receivable. Sales, which we just learned, is a part of capital or owner equity. It increases on the credit side. The amount was $850. So if we have an $850 sale, it's going to be a credit $850 in sales, which therefore it means it must be a debit $850 for accounts receivable. Or we could have done that the other way and said, all right, we have an account receivable for $850 in the debit, therefore it must be a credit of $850. Next transaction says paid cash for rent. It happens on April 14th. The dates are going to start being important next chapter. Paid cash for rent, $250. So we have two accounts. The first one is the account that we've used over and over and over and over. What's it called? Cash. And the next one is rent. And then there's a keyword that we're going to put after it. What is it? Expense. Good. Rent expense. So cash, we'll go ahead and label it DC. Up on the debit, down on the credit. So if we are paying cash, is cash going up or down, everybody? Down. So cash is a debit or a credit, everybody? Credit. So $250. So knowing nothing about the rent expense idea, you know it has to go this $250 on which side, the debit or the credit? The debit. Good. Because expenses increase on the debit side. They're kind of part of owner equity. They're one of those kind of goofy ones. So expenses increase on the debit side. The next one says, received cash on account from Sam Erickson. That name sounds familiar. Oh, yeah, it's over here. We made a sale to Sam. Now he sends us cash, $425. So we're going to have two accounts. What's the first one going to be for receiving cash? Cash. And he's paying us on account, which means he has what kind of an account with us? An accounts receivable. Good. Rec Sam Erickson. Again, it's important to know who owes you money. And in this transaction, he is paying us cash. So it says receive cash on account from Sam Erickson, $425. So if we are receiving cash, is cash a debit or a credit? Good. $450. $425 is exactly what I said. Just making sure you YouTubers are paying attention. Almost got you. It's a close one. All right. Zoinks. Accounts receivable is an asset. It's good for your company. Assets increase on the debit, decrease on the credit. If Sam Erickson is paying us, what happens to his account? Does it go up or down? Down. How do assets go down? Credit. So $425. It's going down. I'm yelling timber. You better move. You better dance.
Opposite every time.
Yes, you will always have a debit and a credit. Yep. That's a great way to think about it. If you ever do a transaction, use one of these blank ones, and you're like, all right, we got cash and sales. You're like, all right, cash is going up, $100. Sales over here. Uh-oh. Bad. You have to have a debit and a credit to every single transaction.
For every chapter.
Yeah. Right. That's what I said. If you know what's happening to cash, you can just figure out what's happening to the other thing. And cash, we're going to use over and 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 over again. Speaking of cash, paid cash to owner for personal use. If we're paying the owner, you already know it's probably some sort of owner equity type account. And then we have cash also. So let's do cash. And then we're going to call this owner drawing. But it would be nice to know the name of the owner, which I don't recall. Oh, Bergam Services. So we'll say Bergam Drawing, yeah. Mr. Burgum, drawing. Drawing is the fancy accounting term for withdrawal. So if we know that we are paying cash to ourselves, our company's cash amount is doing what? Increasing or decreasing? Decreasing, good. So it was 300. So you're going to have a $300 decrease. And then by the logic set forth for accounting, what do we know? Where do we know that 300 has to go on drawing? On the debit, good. But we also remember that capital increases on the credit and decreases on the debit. So capital is decreasing, capital is going down. I'm yelling timber. So it's 300 over there. So please don't unsubscribe. I need these views and money. This is how I support my family through amazing YouTube videos. Watch this. I'll even draw something for you. See that? Not only am I an accountant, I'm also a good drawer. And with that, this is Accounting Man signing off, and you can account on that.